Welcome, Mr. Motswani here. Yes, let us start with our lesson. Today we are doing the full cash flow statement. Remember, 2 days ago, I uploaded the calculations for the notes to the cash flow statement. Notes to the cash flow statement referring to tax paid. In fact, let me start with the first one. The cash generated from operations, tax paid, dividends paid, fixed assets purchased. Then the last one, we have the net change in cash and cash equivalent, right? The last one, we have the net change in cash and cash equivalents. That is what, or those are the 5 notes to the cash flow statement that I have already prepared in the previous videos that I uploaded on the same channel that we are using today. So then now today we just want to prepare the full cash flow statement of the same question paper. Remember, I did mention that we are using the Gauteng 2025 project, right? The Gauteng 2025 project. So that is that is the question paper that we are using, or that is the information that we are using as pasted on your screen. So then now let us prepare the full cash flow statement together, same way we prepared the notes to the cash flow statement together. For the cash generated from operations, I forgot what the answer was on the previous videos or on the previous calculations. However, I'm not going to prepare the cash generated from operations note again. I believe the answer, it will be a balancing figure looking at our cash flows from operating activities. As long as we can calculate and record the tax paid and the dividends paid, we're just going to take the cash flows from operating activities total, we minus or we subtract the tax paid, dividends paid, and interest paid to get the cash generated from operations, right? Now let us start with our tax paid, right? We start with our tax paid. Tax paid, as I mentioned on the other video or on the first video, I did mention that you have to draw your T account. You name it tax paid, right? You have the debit side and the credit side, right? Now, guys, please, for the in-depth understanding of this, or the in-depth explanation of these T accounts and everything, kindly refer back to the 3 other videos that I posted or that I uploaded before this one, right, for better understanding in regards to the notes, so that it can be easy for you, it can be simple for you to understand the full cash flow statement. Right now, looking at our tax paid, we start with information B. You check how much do we have. Or in fact, before you check the amount that you have, you check, is our tax paid an asset? In fact, is our SARS income tax an asset or a liability at the beginning of the year, right? That is the first thing that you check. Is it an asset or a liability? Looking at information B, you will notice that the SARS income tax, it is It is an asset, right? Remember, we said that assets, they are equals to debit, liabilities, they are equals to credit, right? Assets equals to debit, liabilities equals to credit, right? So since our SARS income tax, it's an asset at the beginning of the year, it means the balance at the beginning, it is a debit balance, right? So 23,400 on the debit side. The second thing that you record the income tax for the year, which is information A. The income tax for the year, it's 234,080. I did mention that income tax, it is always recorded on the credit side. So you say 234,080. That is our income tax. Then you go back to information B. We check the balance at the end. Is the balance at the end an asset or a liability at the end of the year? The balance at the end, it's a liability, right? We know that the original side of a liability, it's credit, right? However, However, since it's the balance at the end, we know that with balance at the end, you record it on the opposite side of what the information is telling you, right? The information is telling us to record on the credit side, but we take it to the opposite, which is what? Which is the debit side, right? That rule only applies with balance at the end. So the balance at the end of 10,500, originally it must be on the credit side, but because it's the balance at the end, you take it to the debit side, right? So the 10,500 must also be recorded on the debit side, right? Then you check which side is more. Obviously, you can see that the credit side is more than the debit side. Then you say the 234,080 minus the 10,500 minus the 23,400. We have 200,180 as the amount of tax we paid for the year, right? You show calculations for full marks. 234,080 minus 23,400 minus 10,500. Then we paid tax to the value of 200,180. It's an outflow of cash because that is the tax that we paid, right? We move on now to the next one, which is dividends paid. We move on now to dividends paid. We know the formula to calculate dividends paid. We say the previous finals, meaning the previous final dividends, plus the current interims, right? The previous final plus the current interim, right? Please, guys, for better understanding, go back to the first 3 videos, right? For better understanding in terms of the notes. The first 3 videos, it is a build-up to the full cash flow statement, right? We look at the previous final dividends. We know that final dividends, they are given to us in the form of shareholders for dividends, right? Which shareholders for dividends? The previous ones, right? Meaning we're going to focus on shareholders for dividends for 2023. We go to information B. We have shareholders for dividends to the value of 164,000 in 2023 plus the interim dividends for this year. You go all the way down to information G. They told us that we paid interim dividends to the value of 102,020, right? Then the answer is our dividends paid. You say 164,000, which is the previous final dividends, plus the current interim dividends of 102,020. You close your brackets, you calculate 164,000 plus 102,020. You have 164,000 plus 102,020. You have 266,020 as our dividends paid, right? 266,020 as our dividends paid. Now, to calculate your cash generated from operations, note, right? To calculate the cash generated from operations, you say the total of operating activities minus everything, then the balancing figure, give the cash generated from operations. We say 377,450 minus 200,180 minus what? Minus 266 and 20 minus 123,000. No. There's something wrong here. Something is wrong. 377,450. In fact, no. I'm lying. We have to add them, right? It's more like we're applying the bottom-up method, right? We have to add, not subtract. 377,450 plus 200,180 plus 266 and 20 plus 123,000, right? We've got 966,650 as our cash generated from operations, right? I am so sorry about the mistake that I made earlier on, right? Now, the 966,650, guys, it is calculated as cash generated from operations, right? You look at the first video, I think it's for 15 minutes. You will see how the 966,650 was actually calculated using the full cash generated from operations note, right? Using the full cash generated from operations note, right? Now, now in this situation, I was just trying to, I had actually forgotten this total on, I had actually forgotten how much is the cash generated from operations, right? But by applying the bottom up method, I was able to calculate what I calculated in the previous video, right? In the previous videos, I calculated, or I prepared the full cash generated from operations note. If you don't understand how I actually calculated the 966,654 now, go and watch the first video for 15 minutes, then you come back now to the full cash flow statement, right? We are done with the first section, which is operating activities. We now go to investing activities. For our investing activities, we start with proceeds from sale of asset. You go to information D. Information D, they told us that we sold an old vehicle for 75,000. You come to your fixed asset sold, you record 75,000, right? It's an inflow of cash, right? It's an inflow of cash because we sold that asset, or we sold that vehicle, right? Now, for the purchase of fixed asset, again, we have to use the 5-figure method. You go back to the previous video for you to fully understand the 5-figure method. For now, I'm just going to do it in a very short manner, right? We say carrying value at the beginning plus additions minus disposals plus minus depreciation minus carrying value at the end, right? We go to information B. Carrying value at the beginning, we've got 1,350,000. Additions, it's what we are looking for, right? Because we want the purchase of fixed asset, right? We want the additional fixed asset that we purchased during the year. So we're going to skip the additions. We're going to calculate it using the bottom-up method. Disposals, they told us that we sold an old vehicle for 75,000. Depreciation, it's provided on information A as 95,600, right? It is provided as 95,600. Then carrying value at the end, it is provided as 1,400,000. Now you apply the bottom-up method. 1,400,000 plus 95,600 plus 75,000 minus 1,350,000. We purchased a new asset to the value of 220,600, right? We bought a new asset to the value of 220,600. Whatever that you punished in your calculator, you come and show it here as your calculations. 1,400,000 plus 95,600 plus 75,000 minus 1,350,000, right? For doing that, you already got 4 marks, right? Then the final mark, or the 5th mark, you record it, or you get it by recording the 220,600, which is your final answer, right? The 220,600 is an outflow of cash because an asset was what? An asset was purchased. When we buy an asset, money goes out of the bank account of the company, right? Then the next one, we need to calculate our changes in investment. For changes in investment, we want to know how the investment changed compared to last year. We say the previous balance minus the current balance, right? We go to information B. You'll notice that we do not have our financial assets or fixed deposit at the beginning of the year, right? We only have the one at the end. We go to information E, or transaction E, where they told us that the fixed deposit was increased by 45%, right? The fixed deposit was increased by 45%, right? Meaning that the 449,500 that you see on information B as the balance at the end, it is 45% more than the balance at the beginning. I repeat, the 449,500, which is on information B in 2024, it is 45% more than the balance at the beginning. Right now, how do we get the balance at the beginning? You simply say the 449,500 multiplied by 100 over 145 to get the balance at the end. You say 449,500 multiplied by what we want over what we have. We want 100%, we have 145%. So we had 310,000 as our fixed deposit or financial assets or investment at the beginning of the year. Then we say the previous balance minus the current balance. The previous balance or the balance at the beginning, get 310,000. Balance at the end, give 449,500. So you say balance at the beginning but I'm lying. Yeah. Balance at the beginning minus balance at the end, right? 310,000 minus 449,500. I believe it's an outflow. 310,000 minus 449,500. We have an outflow of 139,500, right? Another way of calculating the... Wait a minute. Oh yeah, it's an outflow. Yes, I will. It's an outflow, right? Another way of calculating that, remember they told us that the 449,500, it is 45% more than the balance at the balance at the beginning, right? We are actually looking for that 45%. So you can just say 449,500 multiplied by 45 over 145 to get the increase in the fixed deposit. You say 449,500 multiplied by 45 over 145, it was increased by 139,500, which is that amount that we recorded, right? So that is the other way of calculating your fixed deposit, the increase in fixed deposit. We are done with investing activities. Let's calculate the total. You say 75,000 minus 220,600 minus 139,500. We have an outflow of 285,100, right? We have an outflow of 285,100. Let's confirm that 75,000 minus 220,600 minus 139,500. We are done with our investing activities. We now go to our financing activities, whereby we have to start with our proceeds from shares issued. We know that for proceeds from shares issued, we record the additional shares issued during the year, not the shares at the beginning, not the shares at the end, but the additional shares issued during the financial year. We go to information C. But the company had an authorized share capital of 800,000 shares. Bullet point number 2, 55% of these shares were in issue at the end of last year, which is the beginning of this year. Then on the 21 August 2023, 30,000 shares were repurchased. The total amount paid was 27,900. That is 30% above the average price, right? An EFT of that, then they told us that we issued an additional 150,000 shares, right? So now in this case, guys, it means when I have to prepare a short ordinary share capital, right? We just have to prepare a short ordinary share capital. They told us that at the beginning of the year, 55% of the authorized share capital was in issue. We have an authorized share capital of 800,000 shares multiplied by 55%, simply meaning that we had 440,000 shares in issue at the beginning of the year, right? We had 440,000 shares in issue at the beginning of the year. You look at your information P. So for information P, we do not have the ordinary share capital at the beginning of the year. We only have the one at the end of the year. It's not a problem. We move on. They told us that we repurchased 30,000 shares, right? 30,000 shares. We repurchased it. Then they told us that the total amount paid, it includes 27,900. That is 30% above the average price, right? Then an EFT was made. Okay, no problem. They told us that we issued an additional 150,000 shares. Then thereafter, we calculated the number of shares in issue at the end of the year, right? 440,000. I don't think what I'm doing is actually necessary, right? Because it's not like we are preparing the full ordinary share capital. We just want the value of the additional shares issued, as well as the rent value of the 30,000 shares that were repurchased. Right now, let us start with the repurchase of shares. We know that for the repurchase of shares, or in fact, let us record the ordinary share capital at the end of the year of 1,431,110, right? 1,431,110. Now we need to calculate the what? The value or the rent value of the buyback of shares. We know that on the ordinary share capital, we use what we call the average price, right? Now we cannot use the 27,900 because that is 30% above the average price. We want the average price, not what is above the average price, right? We want the average price. We're going to say the 27,900 multiplied by we're going to say 27,900 multiplied by 100 over 30, you get a total of 93,000 thousand, right? You get a total of 93,000. 93,000 divided by 30,000 shares, you have an average price of 3 rand 10 cents, right? So the average price is 3 rand 10 cents, right? Then thereafter, because the buyback of shares, it is the first transaction after the opening balance, it means the buyback of shares and the opening balance, they share the same average price. I repeat, because the buyback of shares, it is the first transaction after the opening balance. Therefore, those two transactions, they share they share the same average price. So the 3 rand 10 cents, it also applies to the balance at the beginning. So you're going to say 3 rand 10 cents multiplied by 440,000 shares, you have a total of 1,364,000 as the rent value of your shares at the beginning of the financial year, right? As the rent value of the shares at the beginning of the financial year. Now, to get the rent value of the additional shares issued, which is the proceeds from shares issued, you simply apply the bottom-up method. You open brackets 1,431,110 plus 93,000. No. Yeah, it is a plus, will help. Plus, then minus the 1,364,000, right? You apply the bottom-up method. You say 1,364,000 plus 93,000 minus 1,360. No, I'm lying. 1,431,110. Right, 1,431,110 plus the 93,000, which is the rent value of the buyback of shares, minus 1,364,000, which is the rent value of the shares at the beginning of the year. We issued additional shares to the value of 160,110, right? We issued additional shares to the value of 160,110. That is in regards to the proceeds from shares issued, right? Now, to calculate the next one that we need to calculate, we need to calculate the, okay, I'm just trying to separate that so that it doesn't confuse you. We need to calculate the repurchase of shares. We know that in terms of the repurchase of shares, when it comes to the repurchase of shares, we've got 3 prices. We've got the repurchase price, average price, and above average price, right? And then we know that for the ordinary share capital, which is this, we use what we call the average price. Then for the retained income, we use the above average price. Then for the cash flow statement, we use what we call the repurchase price. Right now, we need to try and calculate. To calculate the total of the repurchase, it's very simple. We know that to get your repurchase price, you simply say average price plus the above average price, right? The above average price that we are provided with, 27,900. The average total that we calculated, 93,000, right? So you say 27,900 plus 93,000, right? 27,900 plus 93,000, you get a total of 120,900, right? That is an outflow of cash, right? That is an outflow of cash, right? Then the next one that we need to calculate, it is the changes in loan. For changes in loan, we know that we say the current balance minus the previous balance, or we say this year minus last year. So now, looking at our loan balance, right? Looking at our loan on information B, we do have the loan balance for last year. We don't have the loan balance for this year, but information F is going to help us in terms of calculating the loan balance for this year, right? It is going to help us in terms of calculating the loan balance for this year. It's very simple. You're going to say the monthly prepayments, including interest, of 28,115, you multiply that by 12 months, right? You multiply that by 12 months, you get a total of 337,380. Right now, to calculate the loan balance at the end of the year, you're going to say the loan balance at the beginning plus the interest on loan of 95,370 minus the total repayments that we calculated, right? So it simply means you're gonna say the balance at the balance at the beginning of 867,000 plus the interest of 95,370 minus the total repayments of 337,380. Then you get a loan balance of 687,000 plus 95,370 minus 337,380. We have a loan balance of 624,990 at the end of the year, right? Balance at the end minus balance at the beginning. Balance at the end that we calculated is 624,990 minus balance at the beginning that we have on the information key 867,000, right? 867,000. 624,990 minus 867,000, you have an outflow of 200. We have an outflow of 242,010. 242,010. Now to calculate the total of your financing activities, you say 160,110 minus 120,900 minus 242,010. You have an outflow of 202,800, right? You have an outflow of 202,800. We are done with our financing activities. Then the next one, or which is the last one, we go to the net change in cash and cash equivalents. For the balance at the beginning, already provided on the answer book, we just need now to calculate for the balance at the end, right? We go to information B, cash and cash equivalents. At the end of the year, we have 39,900. Then we check, do we have a bank or bank overdraft? You will notice that we have a bank overdraft of 62,950 minus 62,950 minus 62,950. Therefore, you're going to say 39,900 or 39,900 minus 62,950. You have an outflow of 23,050 rands. Then you say balance at the end minus balance at the beginning, right? You say negative 23,050 minus 87,400 minus 87,400. You have an outflow of 110,450. Now to confirm whether or to verify whether the cash flow statement our cash flow statement is correct or not, you're going to have to check whether it's balancing. You're going to have to check whether it's balancing. How do you check that? You're going to say the operating activities of 377,450 minus the investing activities of 285,100 minus the financing activities of 202,800. The answer to this whole calculation, right? The answer to this whole calculation, it must give you a negative 110,450. Let us confirm that on the calculator. 377,450 minus 285,100 minus 202,800. It gives us an outflow of 110,450. That means the cash flow statement, it is 100% correct. Thank you. See you next time.